Hey traders, Wednesday, pretty bad day in the market. Not because of the scoreboard, because of the lines that were crossed today. Um, so I will share the details with the members as far as the overall market conditions. Today, the way they lost footing was pretty significant. So tomorrow's action is going to mean a lot because if you've followed charts at all, um, when you lose a or when you breach resistance, when you lose support or when you breach resistance, ideally you want to go back and test it. And they just breached support, and they need to go back and test it. Bitcoin just did that and failed. So the markets just did that. And I was hoping, my focus this week was to avoid that. And today they not only came close, they decided to just, hey, what the hell, we'll just go through and blow past everything. So I mentioned this because I'm going to comment on Lucid today. But I mentioned this because the overall market conditions make it possible now that the QQQ, for example, is not going to hold 300. That's not my forecast. So tomorrow they can avoid that. But the technical problems that happened today open the door for that possibility. So if you don't know what that is, so the QQQ is the NASDAQ basically. And what is this, 2-hour chart? Let's go to a daily chart. Simply stated, they lost this level, and this level foretells somewhere down here, if not lower, potential target with a lot of supports. Well, today they respected zero support. Now the only last support is so far back in June of last year that it almost doesn't matter. Almost, if not for this hard bounce. So there is plenty of support. Technically, pick your neckline. Anywhere from here to here could be the target. Big job, Nick. What I'm saying is, Lucid doesn't trade in a vacuum. Whatever stock you're trading, it doesn't trade in a vacuum. If this stuff is collapsing, Lucid is not going to find footing. Okay, so back to Lucid. I do track it every day. I have, I don't know, 4 tabs open with about 21 charts. One of them is for Lucid. And I had good news for them that markets were going crazy lower, but Lucid was trying to consolidate. So this is still a daily chart. So I had comments similar to the ones you're going to see here. If I drill down to a 60-minute chart, you can see it. You can see the effort to consolidate a lot clearer. So they had highs and lows, but it was consistently sideways. When you're dropping, how do you bottom? You go sideways and you stop making lower lows. Well, today that went out the window. They not only went below, they went back to test it and they failed, and they went down 6%. So yes, the whole market was down, but it wasn't down 6%. I know people love the stock because they confuse the stock with the car. I love the car, even though they recalled probably half of them already, but divest that from the stock. It doesn't matter what the car is. How is the stock received on Wall Street? That's the only thing we're talking about here. Car is super, great. It takes you to the moon on one charge. So that aside, let's talk charts. So losing a place where you've been holding on for a while, and then you lose it violently, it makes it so difficult to recover. So even when you recover, now you have a wall at 26.2. If you want to write these down, they matter. A wall at 26.2 and a bigger wall at 27.3 and higher. Why? Because this orange line I didn't draw. It's automatic. It's the the 2 hugest volume bars. So from here to here is where the traders, bulls and bears of Lucid, love it the most. So they're going to fight for it. So let's say this rallies back. It's going to come into a place where they both love it equally. That's not my opinion. It's fact. It's right there. 2 giant bars. And then you have a gaping hole to 38. It's going to be difficult to get out of here. But if you get out of here, then you can have your run, which will coincide with a trigger from here. Miles away from the conversation from here today. Now it's, how can we get back above 26.2, whatever the number I told you? How can we get back above today's highs, basically? Yesterday's highs, sorry. So today's devastation was not in the score of -6, but where it happened. So let me put my lines and maybe I can speak to them a little better. I already had lines saying support zone if lost, new leg lower. I was confident of that. So now not only we lost it convincingly. So 21.5 is in the books, not in the books, is on the table, if not much lower. What? Now you're all upset with me. I'm not making this stuff up. That stuff happens all the time. So it happened today 3-4 times in a row in the market. So you'd want it to stop here, and I have an alert here that pay attention. This could be a stopping zone because of prior support. But look how far back it is. Doesn't mean a lot when it's this far back, but it does mean something. So there will be people trying to buy the dip. Technically, they will fail and fail and fail until they satisfy the gods of charts. You're saying charts aren't everything. They're not, but they're a hell of a lot more than opinions. And right now, they mean so much more than opinions. It doesn't matter what you and I think of the company. When you and I think of the car, what's in charge right now is machine A versus machine B versus machine C, and they could give two shits about anything else except as to what is the history. This is my code given the history. Where is the MA? This is my code versus the MA. It's so consistent, it's spooky, but it happens. So job number one for the bulls: retake what you just lost. Otherwise, you're going to bleed all the way down, breach 22, most likely try to. This is my estimate of where they want to stop. These orange lines these orange dashes denote the fact that there will be buyers here, and I think they will fail. Now, they could get tremendous help if the market in total bottoms. So what I said, it's mechanical. Once it lost footing, the machines flipped the code. This was that stent sideways. Then they lost footing. Then the machines flipped the code to, you can see it, sell the rallies. Rally sold. Rally sold. Rally sold. What do you think is going to happen to the next rally? They're going to try to sell it down just like they sold all of these. And it's almost like spooky, the timing between the two. So I don't know what time frame that is. It's just very methodical. Don't expect rallies to last without setting a floor first. These V bottoms are no good. They don't last. They're not sustainable. They're fun and they're tradable, but they're not a proper bottom. The proper bottom, they were working on it. They totally did it, and then they just threw it away through no fault of their own. It doesn't matter whose fault it is. This was a proper way to set a bottom. This was an excellent way to try to get out of it, but it failed here. You should see my note. I'll show you. So you know I'm not on the bear side. By the way, I have 240 people that watch me do this all day. So it's not like I'm doing this in the vacuum and I'm full of shit. I'm not. Trust me. I'm in a room with hundreds of people. So this was my note to us, the hundreds of people in the room. Lucid's alert to me: disappointing loss for a nice consolidation zone. I was really rooting for it. Therefore, the bears can push it down to 21.5 or lower. This is my note to myself and the group. If long, short term, like if you're a bull short term, I would consider stopping out. So what does that mean? This note says to, if somebody was trading it like for today, tomorrow, or next week, you want to stop out. The alert came out somewhere here. I can't remember. That doesn't mean an investor should listen to this, but short term, you're likely to see more downside, especially if the markets in general continue lower. So we are in headline mode. Disclosure: we are in headline mode. So headline can save it, just like it can save all the market. Just like a headline broke the market the other day, Bullard. So we have war talks. We're dying by 1,000 cuts. Fundamentally, this is not going to change how many cars Lucid is going to sell. They're probably going to sell every car they make once they start making them. So, producing them at full bore. So sales is not going to be a problem. So who cares if the rate is higher or lower? They're going to sell out of every widget they make, right? So the headline is not going to change the business. It just changes the stock price action, interrupts it temporarily, and it makes it lose footing. So traders should be aware of these comments I'm saying now. Fundamentally, you do your own homework. Recall, no recall, doesn't matter. I think eventually they will sell out of every car they make. It's that simple. For now, the stock price is under fire and will bleed lower. So what am I saying? How could I use this information? If I'm an investor and I'm already long, there is no way on earth I should add anything right now. I don't know anything new than I did last week. Nothing. In fact, I know more bad news about it because I read a recall of sorts. So maybe I should wait out a little bit to see what that's all about. Chances are this blows over, but what if, right? So if I'm already long, why add? I'm just making my problem bigger with no new information, just out of feelings. Oh, screw that. I'm going to put more on the line. No, I wouldn't do that. If I'm looking to get long for the long term, I could nibble, but there is no way on earth I should go all in. The stock market could crash 20% from here by next week. Yeah, that could happen. That's the kind of thing that happened today. Look up the SPX daily chart and you tell me what level we just lost and what downside it has, potentially. Okay, so I'm an optimistic guy. I still say we make new all-time highs. I know that sounds crazy, and that's not the prevailing meme. Oh, Nick, we've got a golden blah, blah, blah. Everybody's got an opinion. All I do is track the lines on the chart so I can put all these opinions aside. I don't listen to news. I'm in touch with reality, but I choose to look at chart lines, not headlines, because the headlines are only designed to make money for the headline writer, not to inform you on what's going on. They will make mountains out of molehills in order to get the eyeballs and the clickbait, viewbait, whatever you want to call it. So everything is in the charts. The SPX I know is in trouble. That's the S&P index. So I don't need to listen to the news, and now my platform is locked up. Wake up! I broke it. I broke TradingView. So this is the SPX 1 hour chart. January 24th low. Today is low. If we don't get off this pot pretty quickly, the downside of this, ooh, doggy, big. Okay, so be careful. Signing out.